market staged a smart recovery on Friday. However, for the week, the Nifty, the Sensex and the Nifty Bank posted losses while the mid-caps outperformed. Hello and welcome to Editors Roundtable. Over the next 30 minutes, we'll tell you how stocks reacted to the central bank's regulatory action, the big earnings upgrades as well as the downgrades, and the market outlook. I'm Nigel. With me, my editors, you have Prashant, Anuj, as well as Nimesh who join us. And we also have Mir. Hey, guys.
Hi, Nigel. Good evening. And of course, thanks to Nigel for the young question. Because, who wants to listen to the three mid-40 guys and throw in Mir as well?
More than 40. Everyone wants to listen to you all, guys. I'm lucky I'm in the hot seat.
But yeah, I mean, just that kind of a week, right? By the end of the week, it left you confused. Actually, especially the last 2 days, whether the market was up or down. I mean, look at Bank Nifty yesterday, down so much today, sharp bounce back. Yesterday, the PSU index was down so much today. It was up so much today, sharp drawdown. So, I don't know. I mean,
I want to quote Vijay Kedia, who said, in a recent party that ये market भाप रहा है, market सबको भाप रहा है. So it's just testing the patience of every investor as to how much it can fall.
So he said it in other context, but yes.
So yeah, so bhap raha hai. So that's the market for you. It's going to be very tricky.
But no follow through, right? I mean, if you're looking for a direction on the index, one day it is down, one day it is up. Now, for example, on Friday today, I mean that is today, we left off 50-60 points higher. And if say Wall Street doesn't do very much on Monday morning, on the Nifty, it's not very clear whether the market wants to actually continue because it's not followed through on the upside, neither on the downside. So I think that kind of a
So from a technical point of view, imagine 21,690 has been considered as a big support on the Nifty. If that gets broken out, I'm told markets can sharply fall. And on the upside, if 21,800 gets cleared on the upside, then I'm told there will be a large short-term rally as well. So, in the 200 points, market can swing either way. So
absolutely.
That's the kind of market.
That's where I think the 20 and 10-day exponential moving averages are placed. Let me just, take you through the market action for the week. Though, as I said, it was a bit of a mixed week for the market, especially for the Bank Nifty. The Nifty was down marginally. The mid-cap index was up marginally for the week, though it didn't look like that on Friday, of course. On Friday, it was completely different. But, guys, what was happening was very interesting. Look at the Nifty Bank. For the week, it was down 0.7%, but within that, the PSU Bank Nifty was actually up 5%. And the Nifty Private Bank was actually down 2.3%. It's the weightage of the private banks, which is, of course, the factor here. And that's why you saw that move on the Nifty Bank. But for me, the big highlight of this week was State Bank of India. It had its best week since January 2021, and it really broke out to new lifetime highs. And it looked like this is finally looking like the 2003 to 7 phase when SBI really was the leadership stock for the market. It looked like that. And of course, the other big highlight was the fall in some of the FMCG majors like ITC. Of course, there was some news flow as well. Also, some first signs of markets moving into defensives. The top gainers this week, apart from PSU banks, were actually Nifty Pharma Index and Nifty Healthcare Index. So, in that sense, perhaps the market did throw a bit of a warning sign, especially in some of the non-bank PSU stocks towards the end, like PFC. But still, the jury is still out on, what next for the market, really.
Okay, all right. Anuj, just one point I want to make with regard to that Nifty Bank point that you're making. We have HDFC Bank that's been a big underperformer for the last 6 months or so. Yeah. So I'm just wondering whether the market is ready for new leadership on the Nifty as well as the Nifty Bank. The last 6 months, HDFC Bank has been an underperformer. And if you look at its weightage on the Nifty Bank and the Nifty, on the Nifty, it had close to around, 400 basis points difference between HDFC Bank and Reliance Industries. That's come down to around 100 basis points. Yes. And on the, on the Nifty Bank itself, between HDFC Bank and ICICI Bank, there was close to 600 basis points difference. That's come down to 200 basis points. So, in the near term, if maybe ICICI Bank can take over the leadership and maybe Reliance takes over the leadership, that breakout that we are talking about, dethroning HDFC Bank, may not be such a bad thing. How we talk about cricket parlance, right? If the batsman's not playing so well, keep him in the team. But, maybe, in fact, just change the order a little bit, and that'll help.
Oh, absolutely. I think, Nigel, that's a very nice piece that you put out. And in general, I think also the banks, which normally peak out at 38-40%,
that's
already down to
31%.
31%, right? And as you said, I think the day perhaps HDFC Bank comes down from the top of the pedestal is perhaps when it bottoms out as well. That's also possible. We have Mihir with us, actually. Mihir, what have you made of this recent underperformance of HDFC Bank and the way PSU banks have filled up that gap, especially SBI?
I think it's cause and effect. The fact that PSU banks have done so well is probably taking some money away from the private sector. But in general, the banking index has been underperforming for some time, and most of it is linked to the fact that we have kept liquidity quite tight for quite much longer than expected, frankly speaking. And even in the MPC, the RBI is a bit on the hawkish side as far as liquidity is concerned. So we may not expect a delay in the rate cut cycle, but certainly they are keeping liquidity tight to make sure that inflation expectations don't go haywire, and that is, I think, weighing on the banking sector. My guess is that typically stocks tend to lead the actual good news by a few months, and we are probably towards the end of the underperformance of the banking space rather than the middle or beginning of the space. So
Private banking space.
Private banking space, absolutely.
PSU
PSU is a different orbit altogether. But it typically happens, right? Because you've seen so much action in PSU financials, not only PSU banks, but the other PSU financials, that it is sucking some retail money away from the mainline banks, I would say.
You know, some have made this argument that PSU banks now should, because they're so well run, the NPA problems are a thing of the past, technology-wise things are looking much better, that you should not shy away from giving them, maybe not the same multiple as you'd give a private bank, but it should not be that big a difference as well. Public sector banks, even after the rally, etc., they're still at what, 1.5 times, 1.6, in that vicinity, right?
Certainly.
So is there multiple expansion room, in your opinion?
I would say it's limited because the business composition is different. Private banks are still more retail oriented, where the margins are more stable, higher and granular. And retail scale up is far more difficult than corporate book scale up. So to that extent, that valuation differential will remain, I would say. Even the growth differential will remain, because all said and done, private banks will always be more hungry for growth, whether it's from the existing business or from new business areas. So that differential in valuations in quality will remain, I would say. Yes, when things go to extreme, there will be a catch-up trade, which we have seen in the last 1 year.
You know, for last as well as this Editors Roundtable, I wasn't part of that party, so I'm missing out on all these dialogues.
Okay, that's okay.
I'm lucky.
You've been partying a lot some other ways.
Yeah, no. So I was at another party this week, and there was some of these fund managers, and I asked that fund manager who's been the big bull on PSU and maybe a mix of mining stocks as well. So I said, what do you make? All these stocks are up. So he said, the story is still, there's a long way to run from here. For him, he can say that actually because he's bought it less than half and some of them 1/3 the price as well. So, but clearly, I mean, a few fund managers that I met and some of them who have got this PSU rally bang on, they said that there's a lot to go. It's easy to say because they've got in at a great price, but that's just some feedback that I got from the party that I went to on this week. But Prashant, earnings season, how has it been?
I mean, we are a month into the earnings season now, Nigel. So let me just go across and take stock of what the earnings have thrown our way. And we're actually 0.75% done in terms of the earnings season. This is the third quarter season. And what we typically do is, how have earnings expectations moved in this last 1 month for the top 200 companies? So we have, as I said, 76 companies which have reported, right? And 52% have seen downgrades and 43% have actually seen upgrades. So more downgrades than upgrades is what we've seen. And these are, by the way, Bloomberg consensus expectations. So for stocks, you'd say, well, this does not add up to 152. That is because, for many of them, for some of them, actually, not many of them, there's no coverage. So this is Bloomberg consensus expectations and how the street has moved the earnings expectations of full year up or down. So let's just get on with it in terms of the top upgrades that we've seen. Notice something, similar, all in a way new age tech, right? Look at this. So EPS change and I've looked at FY24 because, you can look at FY25 as well. But the point is there's more certainty now with 1 quarter left and that will reflect in any case on FY25. So I've taken what is nearer. So PB Fintech has seen a 107% earnings upgrade for the full year, FY24. Delivery has seen a 36% upgrade on top of where earnings estimates were when the numbers were reported. Zomato has seen a 21% earnings upgrade. All right, this is all new age. Look at the oil marketing companies, and we've discussed this earlier. Nimesh has also put out a few pieces over the last few months. IOC has seen a 20% upgrade. HPCL has seen a 13% upgrade. BPCL has seen about a 10% upgrade. And it's strange. I mean, oil stocks do well. Aviation stocks are also doing well. Interglobe has seen another 19% upgrade. So Indigo is on a roll. Maruti has seen a 14% upgrade. And of course, Trent, we were just discussing this off air, 13% upgrade for Trent and full year earnings expectations. And there are some cement names as well. ACC's on the list and there is Ambuja Cements as well. But upgrades are in the minority. Downgrades are the longer list here. And once again, chemicals top the list in terms of the number of companies which have seen downgrades. UPL, it's a big one, right? UPL, of course, the troubles are mounting. Navin Fluorine, 30% nearly. Gujarat Fluoro has seen a 23%. And Tata Chemicals also disappointed and has seen a 20% downgrade. The QSR companies like Devyani International, Jubilant Food, and we kind of again talked about how names like Zomato are doing well, but QSR chains are not. Nykaa is another one which has seen a 41% downgrade. Then there's Piramal Enterprises. Some companies, Loris Laboratories, continuous disappointment. Adani Wilmar has seen also a sharp disappointment. Vedanta has seen a 22% downgrade. Tata Steel was a little surprised, but it showed up on the list with a 40% downgrade to full year earnings expectations as well. So that's the list. I mean, 76% done for the third quarter earnings season, but the overall picture is not all that sort of pretty, with many more downgrades as compared to upgrades. Mir, any actionables in that sense from that list that I presented, or is the market super fast in pricing things in, but is there anything left here?
I think the broad trend is kind of similar to last quarter. It was the same chemicals, some IT, and some IT, some financials, especially banks, which saw minor downgrades, and that trend continue in this quarter. I think broadly speaking, the global sensitives are still not showing so much traction. The domestic discretionary demand seems to be again a bit of a question mark, and again the restaurants part and the discretionary QSR part, same trend as last. So I don't think there's a bit of a change in the trend. I would have hoped that the consumption piece picks up a bit, but that's been a little bit of a disappointment.
But nothing actionable in that sense? I mean, anything you like or dislike? Or dislike more?
So for
or
example,
like more?
chemicals, we've seen massive downgrades, but now
How much of
is
it
the
is
street behind now? Because the price is also corrected, right? They are
Yes.
at rock bottom
In
prices
fact,
now.
most
So
of them have
from a
stopped
price-
falling.
Exactly. A couple of stocks
on
have
bad
started
news.
for
For
Yeah.
example,
rally, like
RBI has been a big mover
Exactly.
actually.
Yeah, I
Correct.
mean,
So
so-
from that sense, you got a sense
So
that
chemicals, as we
pricing-
discussed, a couple of months ago also, chemicals, the game should be now volume growth. We should not be building in margin expansion. But most of these chemical companies, especially the large ones, already have executed or are in the process of executing large volume expansions.
Yeah.
So even just sheer volume expansions can drive earnings by 15 to 20% for the next 2-3 years. So that's good enough after this correction.
Okay, all right, got that. Well, I'll tell you what, let's slip into a short break. On the other side, we'll continue to decode the market action and look at the cues that are stacked up for the next week. Don't go anywhere. Welcome back. Well, the central bank's action against Paytm has led to a sharp fall in the stock price, but it was not a straight fall, and all distress is not the same. Nimesh has got some interesting data. He's hopped across to the wall to tell us more. Nimesh, take it away.
Well, Nigel, the big newsmaker of the week was Paytm, right, on the back of that RBI action. And we saw huge volatility in the stock price as well. Now the key question is this the right time to buy or an avoid? Let's not get into that, but I've just looked at the history on what the RBI action means for the large corporates or the large companies which have not complied with the regulators. So let's look at let's start with Paytm first. What we saw from an IPO price, the stock is down almost 80% 81% to be precise. Today, actually, this week, the stock hit a low of 395, and I've seen a bit of a pullback from that. But that's the very limited history that we have after the RBI action which happened earlier this week. Now, look, yesterday RBI governor spoke on Paytm, deputy governor spoke as well, and the governor was very clear in his message that if everything has been compliant with, why should we act? They take restrictions when the engagement doesn't work with the corrective actions not taken. So there has been serious lapses, is what been the key reason why RBI had to take the action which they took on Paytm. But if you look at the history of such actions by the RBI on various companies, that will show you a different picture. I'll start with Dewan Housing first. Look at the Dewan Housing chart. From a high of 679, the stock had collapsed almost 97%, and eventually it got merged into Piramal. So it got stopped trading in 2021 after it got merged into Piramal Enterprises. So that's been the history for Dewan Housing. We saw, and there was a multiple volatility as well in this particular stock. That's one example. Now look at RBL Bank. If you look at RBL Bank, the peak price was 701 way back in 2019. From there, we've seen a lot of bouts of volatility in that stock price. It hit a low of almost 77 in 2022. This is when RBI finally took an action. They got the board change. They got a new CEO as well. RBI representative came in. And after that, we saw a big recovery in that stock price in 2024. So that's been the history of RBL Bank. Now look at Yes Bank as well. Even if you look at Yes Bank, the high of almost 400, which was in 2018, that stock had seen a 98% correction from the top, hit a low of almost 11 rupees in 2021. Again, this is where the RBI action came in, right? They got the PSU banks and private banks to come in, take over Yes Bank. And from there, after they got a new CEO, this is how the stock rally has been. So the key question is, what is the key message from the history on what the regulator action takes? Whenever there is an RBI action, the stock has seen a pretty much of, there's a lot of volatility. The stock corrects a lot. It does recover and see some pullbacks as well. But the end game has been pretty worse for many of these companies. Also, if you look at some other companies, again, when I show those charts, when the stocks have bottomed, it's largely been bottomed when there has been some action change in terms of ownership or in terms of the change of board. So clearly, history suggests that when there are large RBI actions, one need to be very careful. The stock price will see some pullbacks, but the end game for many of the stocks have been very bad and only improved when there has been a change of guard.
All right, Nimesh, very interesting link there. And I think what you said, is, in terms of the fact that when the collapse happens,
it's not one way.
There
you see a lot of volatility.
On that chart, we could not see, but some of those rallies are massive.
Massive. I mean, stocks at times have even pulled back 50-60%.
Yeah.
And everybody feels like, okay, this is done deal. Now, it's zyada kya girega? And from there, the stocks have become half. From there, it's become half.
Yeah.
So, but the history suggests that we need to be very, very careful in companies where there is a regulatory action, especially in the financials and from a regulator like
absolutely
RBI.
from a regulator like RBI, which
Exactly.
has so much credibility. A lot of people have said a lot of stuff. Obviously, RBI would have seen something, and that's why it would have acted. I mean, it would have seen something. That's why it had acted earlier in cases which Nimesh mentioned, and maybe same is the case with Paytm Payments Bank. So obviously, of course, you got to make a bit of a distinction between the listed Paytm and Paytm Payments Bank. That is also true. But yes, for now, there's a lot of
There
price
is one
damage.
more, I'm not sure if that really matters, and I was talking to Nimesh earlier,
Yeah, we were
which is
chatting.
that all the other instances, they are banks, financial institutions, where it's a matter of leverage, right? That's the biggest risk with financial institutions. Whereas Paytm, in that sense, I mean, the lending which has also been happening has been happening out of bank books, not through their book. So it's not a leveraged institution in that sense. So it's maybe a slightly different business model. But I think
But
great data in terms of...
It's not only, I just took the RBI example and the few examples, but even if you look at SEBI, for instance, there are many instances when regulators taken a very sharp stand. You've seen massive volatility, and the end game has been pretty poor for a lot of people. So I just wanted to put a piece that one needs to be very careful, especially the traders need to be very careful in such companies where there is a stringent RBI or a regulatory action happening.
Well, Braveheart would say that the stock was at 2,100 odd. It's come down to 400 odd. But as you said, you'll be careful when there is this sort of regularly overhang. And it has cash in the books of 170, 180 rupees.
In case of Yes Bank, in case of RBL Bank, a lot of other stocks, for that matter, some of the NBFCs as well. There have been a lot of rumors about somebody will buy out, somebody will take it over, stock will run up 50%. But the end game has been pretty
Nigel, and the
bad for
2100 price, I think that was the unreal price.
No,
That valued the business at $20 billion. It listed at, that was the high. I mean, there was a listing high, and then of course, I mean, we know
at that point
what
of time,
happened
this
immediately.
IPO frenzy was at its high. And imagine some of them, they only got in that IPO. It's painful. You meet investors.
That was a different frenzy. I mean, that was a time when even the CFO said we could have priced it higher.
Indeed.
And they could have, actually. So, that was, of course, a different time. And then, that was...
Maybe your sense on not only on Paytm, but generally when there is a regulatory action, how do you as a fund manager approach those kind of companies? What is your advice to the retail investor?
In general, I stay away from all kind of regulatory and political risk. So, even in sectors like, say, sugar or oil marketing companies, I find it very difficult to, take a big call, a big positive call, because you just never know. And that's in a benign situation. When the regulator actually against you, it becomes really difficult to take a call. I'm really not keen on, trying to participate in falling knives.
Did you just say OMCs? Have you seen that?
I know.
But it's an unfair question, but in your long career of money management, you must have owned a stock where you woke up one day in the morning and something dramatic happened. What do you do? Do you sell and ask questions later? Or,
Absolutely. Yeah, that's typically, at least that's been my approach, you know.
Okay.
And most of the time, you know, what happens is then when a stock is down 20%, 80% of the people are in two minds. And that's probably the only day that you get a chance to exit whatever quantity you want to. Because after that, when panic really sets in after a day or so, it becomes very difficult. So, you know, sometimes when, especially if there is a political event or a, you know, geopolitical event or this regulatory kind of actions, it makes sense to just make a stop loss first, or at least reduce exposure first and then think.
Okay, all right, Mayor, point well taken. Thanks so much for joining in on the show and giving us your inputs.
Always
And
a
that's
pleasure.
it from me as well as all the editors here. We'll wrap up on this edition of Editors Roundtable. You stay tuned. A lot of news and updates coming up on the other side.